Today we're going to talk about cyber insurance requirements and what we're seeing on underwriting cyber insurance. Whether you've purchased cyber and are now seeing increased underwriting requirements for your renewal, or you're thinking about buying cyber insurance for the first time and you're concerned that you may not fit the requirements many insurance companies are having these days to get coverage. In this video, I'm going to talk about the cyber marketplace in late 2021 and what's going on, coming right up. Before I jump into it, can I ask you to do me a favor? Hit the thumbs up button. It only takes a second and it helps me grow my relevance on YouTube. Thanks. So, you're either facing a bit of a challenging cyber insurance renewal and you're wondering what's going on, or you're thinking about buying cyber insurance and you keep hearing these stories about stringent underwriting requirements. Let's take these as two separate subjects. First, you have cyber insurance and you're facing greater underwriting scrutiny on the renewal. This is not uncommon. Many cyber insurers have stepped up their underwriting guidelines as well as their pricing structures in late 2021 in response to the tremendous increase in claims and ongoing cyber threats. In fact, the loss ratio for insurers on their standalone cyber insurance policies went from 34% in 2018 to 73% in 2020. And we're expecting the loss ratio, which measures the volume of lost dollars spent divided by the premium volume for cyber insurance, to worsen dramatically in 2021. Much of that impact is due to ransomware. You are not being singled out for increased underwriting scrutiny. All insureds are seeing increased underwriting questions, supplemental applications, and the depth of the questioning increasing. What we're seeing in many cases is that underwriting questions are no longer simple yes-no answers, which can present limited information to an underwriter. And instead, what we're seeing are more open-ended questions, like, please describe your backup systems, or please provide details on how you authenticate wire transfers. Underwriters and technical experts hope to gain a greater understanding of your security posture by doing it this way. For larger firms, insurers also want to know more about your preparedness and compliance plans, including recovery should a cyber event hit your firm. Not only will having the proper written plans in place satisfy your insurance company, but they'll also help you mitigate the cost and duration of an event should you be hit. Another underwriting tool being deployed by several insurers is a cyber risk assessment tool that scans an insured's perimeter security and provides a report back on two major areas: open port vulnerabilities and CVEs, common vulnerabilities and exposures. CVEs are software vulnerabilities that can be exploited by hackers. If a security posture scan reveals weaknesses in these two areas, your current policy may not be renewed if these issues are not resolved. Now, here are the big 5 underwriting issues outside of the risk assessment scans we're seeing commonly today. Number 1, questions revolving around multi-factor authentication, or MFA. If you're not deploying MFA on remote access, email, and other privileged access points, this is going to be a problem. Number 2, backups. The frequency of backups, the method of backups, the archiving of backups, and are questioned. In addition, we're seeing questions relative to the last time you successfully tested a backup. Number 3, remote desktop protocol, or RDP management, or disablement to prevent threats of ransomware delivery. Number 4, the encryption of mobile devices. And number 5, wire transfer protocols, mandating a secondary means of authenticating wires over a certain dollar limit, usually around $25,000. Now, a lot of clients say, I'm not sure how to answer these questions. I get it, and I'm no technical expert either, but what's important is that you don't guess. Get your MSP involved or your IT department involved to help you answer these questions. If you're afraid that your answers may increase your premium or decreases your chances of getting a favorable renewal, don't sugarcoat the truth or make assumptions that it's not a big deal. These questions are big deals and they need to be handled properly. Failure to be truthful or failing to fully disclose answers could land you in trouble if a claim occurs. So, how do you make sure you get the best renewal outcomes as possible? First, start early. Your broker will likely send you a cyber renewal questionnaire 2 to 3 months prior to your renewal. Don't delay in filling that out and getting it back to them. There may be follow-up questions and back and forth, so giving yourself plenty of time in advance of the renewal is critical. I know, I hate filling out forms as well, especially when it's technical, but don't procrastinate. That does no one any good in the long run. Second, well prior to that form, have a conversation with your MSP or your IT department and review some of the issues I've presented here. Is everything up to snuff? Is there anything you're not doing that you should do in order to improve your security posture? Have you been holding off on IT investment that you should pull the trigger on? Answering these issues before the renewal process starts puts you in a much better position than not lifting the hood and peeking around inside your IT infrastructure. Okay, now let's talk about the company that hasn't purchased cyber insurance and they've heard that it's increasingly more difficult than it was in the past. This is true. As mentioned in the first part of this video, there's an increased scrutiny on underwriting, IT security posture, and how you manage cyber risk. But that doesn't mean it's impossible, especially if you're a small firm under $5 million in revenue. For many small businesses, there are still many cyber insurers that can quickly and easily get you through the underwriting process. You still need to have encryption, MFA, and an acceptable backup strategy, and a secondary means of verifying wires, but the underwriting intensity is lessened. Here's the bottom line. Whether you're a small firm looking to purchase cyber for the first time or you're a larger, mid-sized firm approaching your cyber renewal, you will need to demonstrate a higher level of security and awareness than in the past. And this isn't a bad thing. It's actually good for you in 2 ways. The first is that better security lessens your chances of being breached. And the second is that your insurance pricing will be better than the average. Wrapping this up, I think one thing is more evident today than even a year ago. The threats your firm faces from cyber risks are only going to grow. These threats have the ability to shut down your operations, hold you hostage, destroy your valuable data and systems. It can also destroy goodwill and your reputation, putting your firm's sustainability at risk. That means you'll need to invest more each year in your IT infrastructure and probably your cyber insurance as well. Have other questions or concerns around cyber insurance? Not feel like you're getting the support you need from your current broker? Looking for answers to questions? Why not give me a call or drop me an email? My goal is to help you have the peace of mind that you're looking for, and that doesn't always mean selling a product. Let's chat and see if I can answer your questions and if we may be a good fit for your business insurance needs. We can explore that conversation as well. No pressure, no heavy-duty selling tricks, just some conversation. My contact info is coming up, and there's a link in the description box below where you can contact me as well. Thanks for watching this video, and if you found it valuable, please give it a thumbs up. Thanks.